following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Good to be back with you. Sorry I had to take off a couple of days there. Was tending to some things in mainland China, which was actually a huge eye-opener for me. And I haven't been to Shenzhen in a while. It's right near Hong Kong. If you guys ever get a chance, they're giving away 10-year visas like it's nobody's business right now. So when you go to the Chinese embassy, wherever your local Chinese embassy is, just tell them you want a 10-year visa, and they'll give it to you pretty easily, and then you can kind of not have to go through the horror show of the embassy situation too often if you ever want to go back. But man, I went over to Shenzhen, and God, what I think this is a fact, but when you factor in what the yuan really should be, right now in dollars, the GDP of that town alone is $900 billion. Let that sink in for a second. The one single town in China called Shenzhen, the GDP of that town is, or town, did I say town? I meant Goliath of a city, is $900 billion. And it is not cheap there. Incredibly shocking. Real estate is more expensive there than in Hong Kong in most places, if you can believe it. It is the new place to be in China. I went over there to see literally a guy that wants to start up a new China A-shares fund. Got introduced to him. We're going to do some technical work for him. Really cool guy. Got some really cool pictures of some buildings he owns. The guy's knocking down perfectly good buildings to build 90-story skyscrapers in the same spot. It is insane if you ever get a chance to go there and just see what's going on. It's not the most smog-free atmosphere, I'll tell you that, but it's enormous, and everything's brand new, and it's shocking. So got some things done while I was there, but thanks for bearing with me. We're switching over also. We're switching over also to continuous contracts on. We did these in the scanner all back, so I'm going to be talking about continuous contracts just because we've been meaning to do it, and now that we're kind of rolling through December and get into another quarter, we're just going to go ahead and state them on the screens here. Continuous in the VIX contract. I'm showing them in the scanner, the Russell, the S&Ps, basically in a nutshell, all the global indices, futures, and the currency futures, the dollar, the Australian dollar, there's the all the treasuries, including the 30-year, and I think somebody's probably wondering why we didn't do that sooner, but they're done. They're converted in the scanner, and we're going to be talking about them on the screen. Also, I want to let you know that we should have our HTML5 scanner out like literally any day now. Just kind of beta testing it in-house right now. And we're also putting some really cool things into this right now, a really good set of charts in here that are statically up all the time, along with some other information, and the custom sorts, which are going to highlight when they're active right on the screen, the symbols. It's a really cool setup. I don't think you'll ever have to click any more buttons on here for the most part, and it will give some really good distilled information in case you guys were looking for more distilled information. All right. I'm not in the USA, Tucker. I'm still in the Philippines right now. So just went to China for a couple of days and back at home base number 2 here in the Philippines. And we are, another thing that we're doing tomorrow here in the office on a Saturday, we're doing a a 2-hour trading seminar for everybody that works here, because, I think I have probably made a big mistake by, asking some people to program trading related issues by not actually kind of letting them see what the end goal of what they're working on actually ultimately ends up, being, which is, interacting with data feed in the marketplace, and why do people look at these screens, and so we're doing Michael's actually doing, if you ever have called one of our support lines, he's actually doing it, and I'm just going to kind of be doing cameo appearances of it. But we're having a nice little get together here in the office tomorrow for about 40 people in house, which is going to be fun. All right, so continuous contracts. This is the S&Ps. I know you guys have experienced the moonshot here. What do you do with it now? Until we get some new indications, here's the 240s here. Once we started moving up, this was a really bullish sign in itself too. The 240s is profile appearing below price action. You don't short this. It's not time to do it. We could fall apart today, but if you'd have taken that attitude, even a day and a half ago, you'd still taken a beating there. Really, this thing can go a lot higher. Don't try to be a hero on this one. Let's wait for some new information. There's really nothing going on here. We talked about, some short-term stuff the other day. I want to go into the dashboard. Somebody in the den's commenting that going to start giving them the crack, and then it'll be all over on the showing them the markets. But no, we're just going to go over. We're not going to go too deep tomorrow, but it's going to be fun. It's going to be interesting. We looked at some of the short-term breadth crossovers as a way to maybe look at trying to get some points as we retraced back into that 84 the other day. That worked. We hit the big number, the 84 number, and then it's just off to the races again. And here's the short-term ultra 60-minute. But if you look at our, breadth charts on the weekly and daily, we really have been in long-term. We crossed that border, 91. I'm sorry, I meant to say 84. You want to see some kind of indications that it's okay to start getting your toe in the water on the short side. There just aren't any there right now. So if you're thinking the train's left and you're going to, want to get on board and scared to buy the high print here, that could be the case. If you're not in this thing right now, I think it's a wait and see. You're just going to have pullbacks. It's never a good idea to just walk in and look at this and start buying it. So keep that in mind. We're going to have to just pass on longs and shorts right now in the S&P. If you've been long, I don't think there's any reason to take it off, though. Let's take a look at the treasuries. We've got about 10 seconds before we go to break here. Actually, I hear the music now. Guys, we'll be right back after break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Another thing that the guy that I was seeing there, he owns he's a builder there, and he's been there for a long time, so he's built a lot of buildings there, and he's got some really cool new buildings. And one of the buildings that he has, this is a picture of me, and if you'll notice, these are drones in the background of that counter. One of his tenants is actually DJI, and I don't know if you and I was into drones for a while, and I think there's a lot that can be done with those things, but one of his tenants in one of the buildings is the company DJI. It's very, very cool company. Very, like, I think the most popular drone in the world, and they're made right there in Shenzhen. So it's very cool. I don't know if you guys saw that. All right, so the 10-year. I mean, what can we talk about here? I mean, there's really, Banger and I, here's the daily on the 10-year. This is the continuous contract. Banger and I were talking about, what's the macro view, stepping back for a second, on the treasuries in general and, Fed meetings and all that kind of jazz. Would they raise a half a point instead of a quarter? I think a quarter is locked in. This is one of those scenes where, it was a little crazy the night Trump got elected, but you had a lot of volatility. I'm wondering, we were talking about, hey, it might be time to look at this about, you might have some lottery ticket situations that you could kind of play on this one real cheap, in case they do raise it a half a point. I mean, that's, odds are probably not going to happen. The market had Trump not winning 90%, or had, I think it was 10% maybe were the odds of him winning, and it happened, and that was 120 point move down in the S&Ps pretty much almost immediately. I hope somebody listened to us when we were talking about that one, about the VIX futures or just selling the S&Ps. But you might have a kind of a same scenario here on this one. I mean, it's very unexpected, but I think that should be part of your portfolio is, if there's a chance, there's a certain smidget of your portfolio that you should probably have allocated to doing some type of lottery ticket play. So that's the way I'm looking at notes right now, and I can't short them right now, and I can't go long. So I mean, looking at the options market may be something interesting for guys who want to somehow take a shot at the Treasury market. Let's take a look at the DAX here. Let me see if I can get it up here right. Sorry, guys, trying to put this in here. I've got to search the symbol to get that continuous right now. Apologize for that. Let's hit gold really quick. Looking at February here on gold, we're not in continuous on gold. So, what do you do with gold? This was something, we talked about this being a slow bleed. Here's the weekly on the Feb contract. Here's the daily. There's really, we have no divergence here, and gold making new lows and Navigator making new lows. We're below profiles. We just chunked down below 240s and broke down below there. 1168, 1169 is the bottom of our profiles on the 240s now. I just don't see anything good happening here. There's really no catalyst right now that's going to drive gold higher, in my mind. But again, we've come down a long ways. Maybe the better way to play this is to look at the options market if you're thinking about going long and trying to nibble here without really any place to play defense on the underlying instrument itself. I mean, there's nothing to kind of lean against here to orient stops and things like that. So, if you're looking at gold, you could be looking at, debit spread up top or credit spread down below. Something simple, something you don't have to sit there and on the edge of your seat and bite your nails over. Just kind of let it happen. And if it happens after a lot of noise that you don't have to suffer through and get stopped out, that's great. But that's really the only way I'd be messing with gold right now. It's kind of in the hole. Shorting it here is kind of like the S&Ps. It's kind of made some significant moves already. But I will say this, gold is not showing any signs of life here. It's wanting to spin around down here on the lows, consolidate. Those are usually continuation patterns. So from a classical technical analysis standpoint, without profiles really involved too much there, you got to take that for what it's worth. All right. Since I was just in China, we're going to take a look at the Shanghai. This is really, the first week that there's some signs of slowing down in this thing. So I'm going to come back to that tomorrow, Monday, and hopefully we'll have some new things to lean against there on the Shanghai. Let's take a look at the Nikkei also. And this has been one. Let me hit the dollar first, actually. The dollar had almost pulled back to that kind of back the truck up situation, 99.09. Didn't quite get there this week, but has just powered back up and just have talked, got into that DMZ between the daily infra lows and the weekly infra highs for sure, but didn't quite get to the tick on the weekly, but that was good enough, that pullback. We talked about this actually moving higher. I was talking to Joey, and Joey went with me over to Shenzhen to speak to these folks, and we were talking about the dollar, and he threw out the number like 125. I don't know if you guys heard me, 125 on the dollar. He said, ultimately, I think that's where it's going to be fairly priced. I was like, what? So he's expecting this thing to go higher. It's nice that it's kind of tested and gone right back up into consolidation. So that was, I wanted to get a time frame from it on that. And I think we will Monday on the show Monday. So let's take a look now at the Nikkei. obviously really going ballistic here. We're going to take a look at the yen in a second. But here's the Nikkei continuous. There's the breakout, don't look back situation. And here's the daily. So there's like zero reasons to short this thing, and there has been zero reasons to short it. And if you're long, there's zero reasons to really take it off. So one of those things where a big move's been made, it's hard to buy it up here, but this thing could go higher. So guys who are long, sit tight, hang in there. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Was really talking about the Nikkei and how it's really okay to be long, not okay to be short there. Let's take a look at the euro. ECB comments, the whole 9 yards. I really think this thing is going to now head for par. I love that action that happened this week, and I love where it's sitting right now. This is again, the daily profiles where we've kind of reached a target here. I got stopped out a little yesterday trying to short against this, but playing around with fire actually on the road. 1.0543, which is really smart. 1.0543 unfair lows on the daily. We've hit it, started bounced up, pretty much hit that to the tick. But I don't think that you should be looking at this as like even a nibble situation down here. This is bare minimum only, just taking profits off from shorts if you guys had any on. And I fully believe the action technically and what's going on fundamentally, I think you're going to have that whoosh sound finally and just race for par. I mean, you know, there's really no good rhetoric out here. And that's, you know, was talking to quite a few people that run some pretty big money over in Hong Kong. And, you know, par's bare minimum. They're thinking actually much lower. So long term, that's what you're looking at with the euro. But again, that's some fundamental stuff angled in there also. Let's take a look at the pound. You know, I like how this pound's acted. 125.09, coupled with 125.80. That's definitely some support here. You definitely got a pullback. I actually like this to nibble on from the long side right here. I like how it's acting. I like how it's kind of backing and filling right now. And we could go a little bit higher on the pound. And a pound euro kind of spread right now wouldn't be a bad idea. Let's take a look at the Japanese yen. And I think John from Philadelphia was asking me to expound a little bit on some of the markets over here earlier up in the den. And I'd really think it will be beneficial to have Joey on Monday. I'm going to be here. He's going to be in his saddle, and we can really cover a lot of ground and answer a lot of questions of what's going on with the new HK Shenzhen exchange links, how do foreign investors, you know, take advantage of that. I was specifically, you know, in China to do some kind of consulting analysis work. I didn't, you know, Joey's absolutely the best person to have on for that, and we will definitely do that. But we're going to take a look at the yen really quick here. We were the USD yen cross. So we were talking about this one. I mean, Joey and I were trying to figure out, where does this thing go? This thing also, in his mind, is at least a 125er. You know, it's not going a straight line, but, you know, it's really not showing any signs of slowing down here. And, you know, a couple of trigger points that have happened already after we've started busting out from that 103.5. I don't see the next resting point, and I think, you know, what he said, 125 can definitely be attained. But, you know, how do you trade this? If you're looking to take advantage of that, you can either sit tight and wait for some pullbacks, which we've already had one a couple of weeks ago, or you can, again, do the options trade and try to mitigate some risk and just, you know, do a debit spread on top, maybe go long the currency, buy some in-the-money puts on it. You know, there's a lot of different ways to mitigate risk, but I think the easiest thing to do is just wait for a new profile up here and try to buy the dip, look for support. Don't chase this. Let's take a look at the Aussie dollar. All right, so this one, you know, I changed my tune a little bit on this, and I'm looking at the weekly specifically here. You know, we had, you know, been in a nice range, buying the dip, trying to buy a breakout if we'd had a close above. This is our weekly on the Australian dollar. But as we broke down below, then you just kind of got to sit tight. Still not really thinking there's a lot of ways to spend mental capital on this right now and try to figure out which way to go. I like it from just not doing anything with it. I mean, it's something you probably should be passing on. There's not a lot of clear-cut things going on with the Australian dollar right now. That being said, we're going to jump tracks completely here and go back to our futures machine. We're going to take a look at Apple. As the market's been climbing, and, you know, we took a look at Apple couple of weeks ago, we just kind of waited for this reverse back into the fair auction to be able to really start sticking it to this on the short side again. And, you know, you look at this from a relative strength standpoint and what the market's been doing, and, you know, Apple really, even though the latest, you know, kind of empathetic move up here on the north side relative to what the market's doing, the market can go higher and can drag some stocks up. But you really more than likely want to look at another opportunity when presented to short this thing. We obviously are above profiles on the weekly, or excuse me, on the daily right now. But if you look at the weekly, pulling that back up, we just don't look too healthy here, as the markets in the past 2 days just made moonshot moves here. So what do you do with Apple? I think you look at this from the short side. I got a couple emails about it, and I think it's kind of showing itself right now. Let's take a look at another stock that was getting its head kicked in as the market was climbing and offered a couple of good areas for us to short it. Has kind of empathetically moved up. I think Coke is one where you can still kind of look at trying to find opportunities on the short side. We caught a really good one a couple of weeks ago on this one. We've had a kind of an empathetic move up with the market moving up. But, you know, if we can get some new inflection points to focus on this one, I still like this from the short side for a while, actually. Caterpillar. Somebody was asking about shorting this one because it maybe had some, you know, dollar relevance, whatever. I mean, that is true. But, you know, technically speaking, it doesn't really jive with anything on the fundamental thought seen on that one. So this is another one I got an email about, just wanted to mention it. Not happening yet. Johnson & Johnson, this is one we've been talking about. It's just been the coolest trade. Showed itself early. Has kind of thrown in a takeover or two conversation, and still the gift that keeps on giving. So don't see anything different changing for Johnson & Johnson. All right, so Microsoft participating to some degree in the rally. I think it made new highs yesterday, new all-time highs. Yeah. And, you know, this is one we've been talking about, only trading from the long side. It gave you a really good day before yesterday pullback to do that again. So not the stock to short. Look for areas to buy on this one. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that
many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show. So we kind of avoided oil earlier. Let me pull it up right now. Actually, what in the world is going on with my charts here? Oh, daggone it. Let me give this back to my daily. Sorry, guys. Here we go. Okay. All right. We're on track. Oil. Oil it is. Okay. All right. So here's the story. You guys know we're right back up at kind of recent highs on the long-term weekly here. Kind of came off that 52.14 yesterday. So here's the daily. Yeah, I mean, if you forced me to trade this right now, I'm not so sure that it's the best time in the world to try to short gold. If you forced me to trade it right now, I'd have to wait until we broke out 52.14, just had a close above there. If we get a weekly close above there, I actually think it could run some people completely out of this. And then you can start playing defense. Just not so really excited about shorting oil right now. So that's kind of the play on crude. But as we talk about crude, we're going to just kind of go back into some of the bellwethers on the stock side here. Interestingly enough, the reason I kind of brought up crude first is ExxonMobil's kind of right at the precipice of the unfair high here on the weekly. And I don't really think you ought to be looking at this on the short side either. I mean, it's, these oil stocks can go a lot higher, even if oil kind of just peters around right here. Here's the daily on ExxonMobil. Let's take a look at another one. Transocean. What a cool chart this was, huh? And you might be going, why didn't you tell me about this last week? I don't have to tell you about it. If you have this product, I'm putting on my sales hat right now. If you have this product and you actually do some of these custom sorts, this one being uptrend support. So if I come in here and I'm kind of trying to do my daily trading plan and I click on this one right here, rig would have been in there. All right, because it's looking at things that are broken out and coming back and pulling back into support. So, we can start going through some of these custom sorts every day, but you can do these. It's a great tool to use at night to try to find some opportunities that might be lining up for the next day. And what we're doing with this product right now is we're basically putting a static chart in here, putting all this moved over, color coding some of the sorts or the symbols as the sorts happen real time, putting our landscape view down here statically, and also Taz says over here. So you can kind of click down your stocks here really quick, have all your charts change, and we're actually putting a really mega better chart in here for you guys. So going to be a lot easier, I think, to use as a cockpit, and then when things are lining up, they'll highlight immediately. You won't even have to hit the sorts. It'll be embedded in the stock shading. So I think that's going to be pretty cool. But hopefully, you know, it'll alert you to things like this when they're happening. Let's take a look at Procter & Gamble. All right, so this is a pretty, I love it when this happens, actually. I like when things reverse and get back into the balanced area. A lot of times this means that they will actually fully explore the whole fair auction again. That will be your target on Procter & Gamble, 82.28. Remember, this is kind of somewhat of an anti-stock. It's kind of, the spine got broken in this thing back, you know, mid to late October. But, you know, Procter & Gamble could go back and revisit 82.28, and I like the situation of being able to play defense on this one. Let's take a look at some banking stocks. Bank of America. Man, these guys like higher rates, huh? The new license to steal, maybe they won't have to just be overtly criminal and just steal your money by opening new accounts without your permission. Now, with the widening of the yield curve, it's just, you know, hey, we get to steal money the old-fashioned way now. Here we go. Bank of America, zero reasons to short this group, as you know. And a half a point rate rise, that would just be the coup d'etat on these things. That would, man, talk about some moves. Let's look at JP Morgan. Somebody in the den was saying, we teach you right. Yeah, that's about, well, you know, here's, you know, this is the strong of the strong here, and we talked about that. We talked about, you know, what's the chance of, you know, doing some relative strength trading and buying JP Morgan and selling Wells Fargo. We're at 85.12 now. I think when we were talking about this, we were down around 65. This is amazing. The market capitalization that is just blown up like this. Gracious. Woo. All right. And on that, yeah, this is nothing to play around with on the short side either. Wells Fargo. Man. Blind pig. There we go. Well, you know, we were languishing down here, and then, you know, higher rates. Any bank's going to love that, no matter if they're embroiled in billion-dollar fines. Those are rounding errors, seemingly, these days. Still don't look at Wells Fargo as a short either. Once we started breaking above 46.53, that was, you know, breaking the profiles on the weekly. So, again, still nothing to play with on the short side. They upset the party on this one for sure. Let's take a look at Big Mo. This is one I was really happy to see come off of that area before. 65.38 was a nice little trade for a bit. I got kind of trail stopped out of that one, but I'm not exactly excited about shorting it again up here. I don't like to see things come back up into inflection points the following week, and we're sitting kind of right on that unfair high again on the daily. It looks like we might actually have a move up here, so might want to sit tight on reshorting Altria. And we've got to hit this one. Tesla. Bounced off the bottom of the profile here, but, you know, again, you know, for the market to do what it's done past couple of days, and Tesla can't even get to even former lower highs, I guess you could say it that way. 197.41 is a number that I'm pretty comfortable with shorting, but I don't even think we're going to get there. I think we're just going to languish around, consolidate, and actually head back to 180, 194. If you're long this thing, you might want to think about buying some insurance. And you know what that means. We'll be right back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Got about 5 minutes left, or 4 minutes actually. So Steve Rhodes, I won't call him Mr. Rhodes, that's what his father's called. Notice something on the chart here, and we don't have Navigator in the scanner, but I totally get he's just saying, well, we got a divergence situation going on here, kind of higher lows here with kind of lower lows on Tesla, and you also kind of are sitting at a decent leverage point down here. A chance to play defense, and does all this kind of mean that maybe kind of Tesla will be spring loaded off the bottom here? In a normal situation I would say yes, but right now I'm kind of giving the green light to the relative strength, or excuse me, the relative weakness side here by if the market does happen to come off, which God knows, I don't even know if it's got a fundamental reason to come off, but if it does, I mean, this is definitely a weak stock in a market that's just completely blown a gasket, and it has kind of empathetically moved up here a little bit, but I'm kind of throwing that out there right now, and I'm also looking at it's just also got some fundamental issues, and I don't think it's the kind of the stock du jour for a lot of folks right now, because right now, it's not necessarily a trading game, it's a transition game. and it's a transition into how do I take advantage ahead of time. I think actually somebody typed in earlier, let's see here, something in the den to the effect, that, everything really has lined up for getting some things done in the government. And you've also got a guy that might actually treat it like a business, clean up some things. Who knows if that's going to happen? Who knows if he's going to get impeached after 6 months? I mean, nobody knows, But, that temperature of people's thinking right now could continue to drive these things up. And I think right now, Tesla might not be, we're talking about, people stepping on the gas pedal with these banks. I mean, we showed some of those things earlier. That it's really been free money when you've got things lining up like they have. And why would you kind of turn your attention? I'm talking about fundamental things right now, of course, but why would you turn your attention to Tesla, a company that's got issues? And I'm bleeding in fundamentals and the technicals that I'm sure Steve wanted to talk about. But in normal situations, I would, barring everything I said about fundamentals and relative strength of the marketplace, it's not a bad shot to take when those things start happening, like Steve alluded to, that notice this. But I think you got better things to nibble on right now. But the technical setup of us kind of being on the weekly lows and a divergent situation, not a bad place to pick a battle. So let me read Steve's comments here. So that, I just, if the market was kind of churning around and we were just kind of in, normal, major transition times like we are right now, I would say that would be a decent trading opportunity. But right now, I think, you can go out and buy a lot of other things on the buy side right now and probably be much better off. Guys, you've been great. Thanks for listening to small stories about me going to China earlier. Have a good weekend. Stay tuned for Mr. Pesavento, and it's good to be back. You guys stay tuned to TFNN all day long.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.